All right, big IPO to tell you about over at the NASDAQ. TPG, one of the names that certainly for those of us who've covered M&A for as long as I have, we can go back to a long time ago. Of course, one of the big names in private equity for quite some time. Used to be sort of focused on the buyout business, so to speak. Certainly one of the anchors of that business for quite some time. Founded in 1992, but over the last, let's call it 10 years, certainly become a much more of a growth investor, early stage. I don't want to call it early, but pre-public, taking significant stakes and the like. $109 billion in assets under management. About $59 billion of that is fee-paying. Price at $29.50. So we'll see how the stock performs this morning, Mike. And of course, it's the last name that I can think of added to, Blackstone, of course, which is many years ago, which is broadly speaking the largest by far of the alternative asset platforms. But so many of them have different identities, whether it's Carlyle or KKR, which has its capital markets business, Apollo, which really in many ways is an insurer these days. But now we have TPG as well. It'd be interesting to see how the stock performs once it comes public, especially given last year, which was not a particularly strong year for the performance of IPOs after market.
Definitely not strong for IPOs. It was very strong for the alternative asset managers. They're down from a late year peak, Blackstone, KKR, they're all down 15%, but they had great runs.
Yes.
In fact, Blackstone's market cap's bigger than BlackRock's market cap.
And bigger than Cities,
exactly.
Bigger than Citicorp.
It's one of those real markets. Of course, Blackstone came public at the very top of the market in 2007, very famously.
Yes.
So, investors love the group and the dynamics. It is very telling, though, that, Blackstone with lower sales than half the revenues of BlackRock is the bigger market cap, just because the fee structure and the idea that, there's a scarcity value of the quality managers in the alternatives.
TPG, Carl, is sort of timing the IPO with what will be major fundraising on its part, capital raising for many of its core products, which certainly investors may see as a positive because it will give it potential momentum as it now begins life as a public company.
Yeah. And, of course, we get to open the gift of bank earnings beginning tomorrow with the likes of JPM. There's the opening bell and the CNBC real-time exchange. At the big board, it is regional bank M&T at the NASDAQ private equity firm TPG, as David said, celebrating its IPO, the biggest of the year so far. A lot of attention being paid to the banks. I read one take yesterday, Mike, that those who are in it lately are in it for the rental and are weak hands. And we're going to see how much gets washed out in the next, say, 2 to 3 trading sessions.
It's a fair assessment. There's been a tremendous number of kind of upside head fakes. People thought it was finally happening with banks. They're not starting from a particularly cheap valuation at this point. On their own terms, yeah, sure. You want to say compared to the S&P because the S&P valuation's up. But JP Morgan up 1.8 times book value and forward book value, and that's kind of as high as it's gotten, and they trade 15-ish time earnings. So a lot of things probably have to look pretty good, or the numbers have to really keep going up. Obviously, Fed rate hikes are a tailwind for banks. Everyone wants the banks where they have a lot of leverage to higher rates. So it makes sense. The reserve release story might be over, so now it's about actual kind of operating and credit experience. So it seems like it makes sense. Although it's been interesting, Citi had this big catch-up move just to start the year. So it seems like that's the game, like which names have not been fully exploited to this point. Also, Morgan Stanley and Goldman Sachs, very weak yesterday off of Jefferies' earnings. Jefferies had a miss in the morning.
Yeah.
And so we'll see if that kind of lasts more than a day. It just seems like it wasn't a great quarter capital markets-wise in the fourth quarter.
Wells Fargo has been by far the greatest performer.
Yes.
Again, back to, although it did have a strong year last year in the stock market, but a long way to go to recover anything in terms of its former glory.
And the bull case is that it has a long way to go. The bull case is it's been undermanaged. There's a lot of costs to be stripped out. I guess you could still say new management. It feels like everything just happened.
Yeah, but it's not anymore.
But,
Charlie Scharf's now been there for a while.
When Citi said they were getting out of the Mexico consumer banking business,
yes.
I thought to myself, they just bought Banamex. It was 20 years ago.
Yeah, Mike, that happens a lot these days.
We're talking about this all camera. Time flies in your own head.
Right?
Yeah, you're getting old, Mike. I'm here to tell you.
That's how you know.
Yep, that's how you know.
Yeah.
That's how you know.
So.